So I'm going to go over some of the most common questions that got sent through. And then after that, we're going to open it up and then people can just ask questions. If there's any questions while I go through, you can just type them into the chat. First of all, let me know where you're coming in from. UK, Montreal, Hungary, Amsterdam, UK, Slovakia. Nice. Florida, cool. Okay, I'm gonna open my trading view. Okay, so the most common question as always was X mode. So we're gonna go through that at the end. First, I wanna go through some of the other questions. So if you have X mode questions, leave those to the end because we're gonna go through that. Probably gonna take some trades too. And then we can go from there. Okay, so one common question I saw that came in was, where do we place the trades, the positions on those boxes? So what I'm going to do is I'm going to disable my X mode and then show you how I do it, and then you guys can follow kind of the same steps. So I think there's one here. Let me delete everything that's on here. So there's a long position on USD CAD. So what I do is, first of all, I turn on auto. And then at the bottom here, there's this reset button, or you can right click on your chart and click reset chart. That's going to basically reset your scale. And this is how I place my lines for the price. So at this point, you could also turn auto off and then you can move things around without having the scales change. So because when it's an auto and you move it around, the sizing changes. It's not a big deal, but I find you can get the most accurate price if you click on reset, and then you can have auto on and off. I just like to have it off once it's reset because then I can kind of drag it wherever I want without changing the scale. So that's how I scale my chart. And of course, once you just take either the horizontal line or the horizontal array, you place your orders. Top, bottom, middle, or top, middle, bottom. And then, yeah, that's how I do it. So that's a simple question. That's out of the way. Let's move on to the next. How many trade pairs open at once? So that's another good question, and that I saw quite a bit, is how many pairs should you open? So with the overexposure, you shouldn't have more than two currencies at once, right? So if you have, for example, in my watch list I have USD CAD, USD ZAR. So I'm not gonna open more than two USD trades. So because I already have two USDs. Let's say I see another setup on USD JPY. I'm not gonna take it because I already have two trades open. So the base current, you should always have or no more than two trades for the same currency. And if you follow that principle, you really shouldn't have more open. You shouldn't have more than 6 trades open, because if you go over 6, at that point you're probably going to be overexposed on a few pairs. On the pending orders, you can have as many as you want, but on the open trades, I really wouldn't go over more than 5. 3 to 5 is probably good. If you go over that, you're probably going to be having a lot of correlations. Even for things like USD CAD and AUD JPY, for example, like even though they're not the same currency, there's still some correlation to that. So I'll be careful with how many trades you open. Don't open more than 5. I think 3 to 5 is a good sweet point. And then again, you can have as many pendings as you want. Just don't have too many open. One quick trick that I can show you as well, if you want to see how pairs are kind of moving with each other. So what kind of correlation there is between pairs. Because once you know the correlation, you can see if it makes sense to add another trade. Because a lot of times, if two pairs move very similar, why open another trade? Why not just add a position to the trade you're already in, right? So it's way easier to manage that way. Then you don't have to look at 5 pairs. You can just look at 2 or 3 if they move very basically the same. So how you can do that is in TradingView, if you go to the top right and you click on compare, you can add a symbol to your chart. So right now we're going to use the cat. Let's look at how, for example, I guess you guys can give me a pair that you guys want to compare this to. Use the cat to, what should I put in? GBPUSD, okay. GBPUSD. So I'm in the 4 hour, I'm gonna zoom out a bit. So here we can see how they move, right? So we have used the cat up here. We can see it was moving down here. And then on GBPUSD, on the same time frame, it was moving up, right? You can see it's going up here. And if you look at this horizontal line or this vertical line, you can see how it's moving the opposite of GBPUSD or USD cat. And you can go back to, if you want, see how it's correlated. So here we had a big push up, here we had a big push down. So these are reverse, right? So if you want to open a hedge, right? So you can open a buy on sorry, if let's say you're taking a sell on USD CAD, you can also take a sell on GBP USD as a hedge if you want to, and then you close the loser and you keep the winner in profit until TP1, TP2. If the algo shows you a setup like that, right? If there's no hedge setup, then you shouldn't take it. But this is how you can figure out if a pair is correlated, and you can see if you can use it as a hedge, if you can use it, just as another trade. That's going to be up to you. Any questions about the comparison tool? Someone is asking, does this work on a free version of TradingView? Yes, this should work on the free version. I believe I'm on the paid one, but I think I have also used this when I was on the free plan. Do you guys have any questions about scaling your chart to place your lines? Okay, if there's no other questions for scaling, then I can move on to the next thing. One thing I wanted to quickly go over is I saw in the chat today that some of you are closing trades before they hit TP or stop loss, and then you're scared it's gonna go back into your entry and maybe go into a negative, but then you see, okay, it's going back to positive, and you're jumping back in. So you're basically jumping in on our trades, with the hopes of you can cut your losses short and you can let your winners run. But most of the time, you're going to do more damage jumping in and back out of trades than just letting it run. So once you've set up your trades and the algo still shows it, and it's an open trade, then you can just let it run. I wouldn't jump in and out of trades. Like, for example, AUD JPY. What was it? Yeah, last night. So it dropped. I don't know if you guys were holding or not, but for example, I was on a drawdown. I took a sell right around this area where the TP is, and I was on drawdown for I think 2 days or 1 day, and then it came back down. So I was able to close it at break even, right? Yeah, so you guys are still holding it. So yeah, this was an X mode trade for me. I didn't take it on the algo, but just a heads up. So I was able to close it at break even, right? So even with you guys, if don't either let trades run to profit or stop loss. That's the strategy. You don't close positions in the middle of a loss or in the middle of when it's a profit. The algo is very accurate. Sometimes it'll be on point. So sometimes it's, when I say on point, I mean to the pip basically. So you can see here, they went down to the TP and then went back up. The TP points, the entry zones, those are basically strong zones, right? So when price hits these zones, we want to close it. If price broke, the algo doesn't show you the short anymore, but let's say, let me see if I can find an example where price broke above the zone. Do you guys know a trade where price broke above the entry zone? That's still valid? If you do, put in the chat. I want to look at it for you guys. Maybe it's still on the daily. Let me check. Euro AUD. Okay, let me check that out. Okay. Okay. I mean, it's okay. This one is not that bad. Still went back above, but yeah. So for this one, Me personally, because well, I hit TP1, so you guys should be out. Like this, you shouldn't be. This shouldn't be a question anymore because it broke down. I actually closed this trade today as well on TP1. So it broke down, went back up today, and then you guys should have closed at TP1 and have one position left on break even. But a lot of times when, let's say the algo removes the long position and you're still in the trade, move your TP to the entry point. So when it goes back up, you're at break even. So this one already hit TP1, so this one is fine. At this point, you should have one position, or I guess if you close them all, you should have nothing open for this one. When can we move stop loss to TP1? Why would you move stop loss to TP1? Or you mean to the entry? Did you mean TP1 or to the entry? I generally don't move my stop loss to TP1 because what happens is, let's say this trade, let's say this kind of doesn't exist and price is trading up here. It's trading above TP1, and I put my take profit here to secure profits. Most likely you're gonna be hit. So what it does is it's gonna go up, it's gonna break the TP, it's gonna come back down to TP point, hit your take profit. You're gonna be in profit, but then it's gonna go back up and hit TP2. So you're better off leaving your stop loss at break even, because then the trade can actually breathe. If price is trading above TP1 and you're moving your TP or your stop loss to TP1, price will come back down, retest this level because it's a broken resistance, and then go back up to the next resistance, which is TP2. Yeah, so when you're in a trade and the algo recalculates the position, the trade, and it no longer shows the same trade, or it's gone completely, you should change it, because then it's no longer valid. It's just move your stop loss or your TP to break even, and then close it at break even or small loss if you can. Sometimes if you do have some experience, you can leave it. It'll still play out. Me personally, I just like to move on to a new trade. So I'll close at break even or close at a small loss, and then move on to a new trade, because there's so many trades out there. You don't have to take this specific one. There's always better ones, right? So I would just move it to break even and then move on to the next. If the TP changes, then I would change that as well. Just make sure your risk stays the same and stuff like that, so you don't, or if the stop loss changes, make sure you're not risking too much. If you are, then you can do like a partial close or something, or you can just leave it the way it is, whatever you want to do. But if it recalculates, there's a few different rules to follow. There's a picture that gets sent in chat every time. You guys can read that. It's pretty good. If the entry box gets removed completely, move your TP to break even. Unless you know how to read the charts and you can determine if it's gonna go past your entry or not. I hope that makes sense. Let me know if that makes sense, Jay. All clear, perfect. Let's move on then. Dylan, did I answer your question about the TP1? If not, then we can sort that out in the one-on-one later on. Okay, perfect. Do you guys have any questions about the strategy mode? If there's no further questions on the strategy mode, then we can move on to X mode. I guess one more thing I can quickly tell you guys is it's funny to kind of watch the emotions of the group. So last week, everyone was kind of in drawdown, and you can see how people get stressed out and stuff. And then you look this week, people are a little more relaxed, and because they have a blue account. So whenever you're in drawdown, it's not the end of the day. It's part of trading. You just have to accept it, and you have to know, like, in a matter of an hour, it could change so quickly. Like yesterday, I had one account that was in drawdown, like, I don't know, $600 minus, and today it was plus a couple hundred. So in a matter of overnight, or in a matter of couple of hours, things can change pretty quick. So don't judge a trade by the first day, and don't judge a trade by how, if it's in drawdown or not. Just let it run, stop loss, TP, and then that's it. So when I asked the question when I signed up, but not sure if you answered it already. I'm new, so I wanted to know what the underlying strategy is with the algo. So of course, I can't tell you the exact strategy. I don't even know it. I know it, the underlying principle and foundation of the algo is zones, levels. So what it does is it finds different levels in the market where price reverses. Usually it's levels where you see a lot of buyers and sellers exit or enter. That's why you see these big moves. So you can see, we had this big move up here, and then when TP got hit, we had a big move down, because these are the places where a lot of big positions sit. And that's where we either enter or exit, because then we can trade with momentum, and we don't have to sit in trades for weeks, because we enter based on supply and demand levels where the big orders sit. I hope that makes sense. But to keep it simple, it's basically it finds levels in the markets where price reverses. Is it possible to scan markets for one daily time frame? For the daily time frame to look for opportunities if we have time after X mode walkthrough. Yeah, we can look at some opportunities. I guess, what do you guys prefer? Do you guys want to go through X mode first, or do you guys want to look at some trades on the daily? Yeah, Kev, this tool is gonna be, if you're already trading with support and resistances, which is basically, if you don't know support and resistance in trading, you're not gonna be able to trade. And it's pretty much the only thing you need. So this tool in X mode, it gives you all that already laid out, and these levels are so accurate, and the X mode is so well put together and easy to read. I think you're gonna have a good time. Okay, that looks like we're gonna go with X mode first. So I'm gonna turn the strategy off. I'm gonna turn on X mode, and let me know in the comments what market you guys will look at, which pair with the X mode. Okay, Raj was the quickest, US 30. So let's do this indice, US 30. Okay, now, okay, so what we can do is we can do replay, I guess. Give me a date, and then I'll replay to that date that you gave me yesterday. Let's go back a little more. April 19th. Okay, that works. Where's it? 18, 19. There you go. Let's start here. This is the 20th. Okay, so let me kind of explain the basics of X mode first, kind of what things stand for, and how this thing is structured. So there's 4 rows in total, which you can see here. So we have, this is the first row, and then this is going to be second, and then we have a third row, and we have a fourth row. And what these rows mean is they help us identify the different levels of resistance, support, and neutral levels. The first row here, this is the row of highest confluence, and it shows the level on the highest time frame. So we can see an R here and has a circle. This means it's a very high probability resistance zone based on the high time frame. And then here we have the the resistance on the second row, which is still good. But then if you go into, if I would go into the lower time frames, we're going to see probably something like, let me see. So you can see we only have 2 S's here on the right, on the far right-hand side, right? So those are still good zones, but they're gonna be weaker. So the more symbols you have filled, the stronger the zone, right? And the best zones are the ones that have 75% alignment, 100% alignment, etc. So if I go into the 5-minute, it's the same thing. This works on any time frame. You can trade this on any time frame you want. It's just a matter of knowing how to read them. So if I go back into the 1 hour, we can see, for example, this bottom level it has two N's and two S's. So it means this level is formed of a support and a neutral zone. So on the lower time frames, we're going to have supports, and on the high time frames, we're going to have neutral levels. And basically, all a neutral level is, it's the zone between a support and resistance. So this is a neutral level, and we have a resistance, and then we have our support, and the neutral is always in between. So if I go into a low time frame, we're going to see this turn into support. So this is our support. We have another support here, and this one obviously stays the same because it's a high time frame level. And then if I go into the 4 hour, we can see this is a resistance. This is no longer valid because we're in a 4 hour, and it's because it wasn't a major level. That's why it doesn't show up on the 4 hour. So in this case, this is our neutral level, and then this is going to be our support. What I usually do is I mark up my zones on the 4 hour. And then I trade on the 1 hour or the 15 minute, depending on how I want to trade. So to give you an example, if these would be my primary zones, right now price is going into resistance. This is where we sell into back into neutral, right? So when price reaches these zones, we're looking for a rejection. So this, if price hits this level, we're expecting it to go down. Because price is still trading above a neutral level, from here we can take a buy back up to a resistance. Eventually the levels are going to break, but you can, if it's consolidated, you can probably just play this. Or if price moves below or neutral zone, then we start to either to sell into our support, or we wait for it to bounce off support, and then we buy back into neutral, right? Jay is asking, do you still use limit orders for these trades? It depends. So if I know that, if I look at, for example, the daily, and I know that, this is a strong level, a resistance level, and I'm confident price will reverse from here, I'm going to set up my order for sell as a limit. I'm just going to wait for price to get there. If I go into maybe the 1 hour, if I see a rejection on this resistance, which basically means price is still reacting to this level, I'm going to set a limit on this price again, and price is going to go back up, retest it, hit my limit, and then come back down to the next level. So in most cases, I'll still use limit orders. Or if I know price is now trading at resistance, let's say we're overall right now, we're in an uptrend, right? I like to trade, I like to take trades that are with the trend. So in this case, I would be only looking for buys. So what I would do is, instead of putting a sell limit here, I would put a buy limit on this level or in this level, because then price will bounce back to my resistance. This would probably be my TP1, and then this would be my TP2. And then if price would break my neutral zone, I will wait for price to come here, down here, set up a limit. It'll bounce off my support and then come back to the neutral level. The best levels with the highest probability are the ones that have the extensions. So what the extensions are is, it's basically a high probability reversal level. So if price hits extension 1, there's a 73% chance it'll go back to the previous level, which is going to be the support. If it hits extension 2, there's going to be 93% chance it'll go back to extension 1. So if you would take, for example, a short up here, where we also have the extensions, we would place a limit order here, put our stop loss above the extension, and then have our this neutral level is TP1, and then this other TP2, right? So since we're in replay mode, we can actually let this play out on the 1 hour. Yeah, so in this case, it wouldn't quite hit the limit. Let me go into the 4 hour. Yeah, so you can see it almost hit the limit order, but it didn't quite. So this one wouldn't play out, but you can see how it touched resistance or this level, and then it went back down to or support. So if I would have moved my limit order a little lower, we would have hit TP1 and then TP2 as well. Let's keep going. So right now, price is trading in the middle. So above this neutral, which is slowly turning into support, and this resistance, we can see new levels forming. For example, this neutral level is, it has some reversals, but it's not as strong. So when price gets here, it's probably going to break. We can see price rejecting here a couple of times. We can see rejection here. We can see, some rejection here and here. But it's still too, in my opinion, too low to take like a buy off of this, right? So we would want to wait for price to come down here and then take a buy. So let's keep going. Because price is trading in the middle right now, I'm not looking to take any positions. I want price to go into a very good level. So now we can see price broke or neutral level. So what we want to see now is a retest. So that was a retest. And now what we can do is we can take a short. And then this will be my TP1 between these two zones. We can see there's a new level forming. So just to secure some profits, I will close my first position here on TP1. I usually trade with 2 positions right now. If you guys have 3, then you would close 2 here. Or I guess if you're trading X mode, you have more experience. But I usually trade with 2 positions. I will close my first one here and then my second one down here. Here you go, TP2 hits. And because this is a good zone, we could take a buy here. I'll just confirm with the 4 hour to see how it looks here. Yeah, so we can see it had a good rejection. We can see a good wick, and not candle. Oops, oh, I click play without. Anyway, we can still set this up, I guess. Long position. So here again, I would put my stop loss below extension 2, and then go back to the neutral level, right? So you can see how it hit extension 2, extension 1, and it shot right back up to a support. It is a trading opportunity you can take. I've seen people only trade these. It's not my favorite setup, but it's something you can trade. You can see price hit extension 1 and went back to a support level. Let me turn auto off. Reset this. So this would be on my TP1 again in the middle of the zone. We can see it has formed resistance, and there was also neutral level here before, but this neutral level now turned into resistance. So I would wait. I would look at how price reacts at this level, just because it's a new resistance level and has a 75% alignment. I might close my entire position at this point. Yeah, so we can see a decent rejection. I mean, we still have higher lows, but I'll probably just close it, the entire position, just to be safe. Nobody went broke taking profit. So now it's, one thing I want to highlight is you can see there's a lot of zones in this area. I would usually stay away. I try to stay away from the market when there's a lot of different levels. Because then there's too many bounces in between levels, and there's a lot of consolidation. So I'm going to wait for a breakout either here or a breakout either to the upside or if the algo removes these levels and I have more clarity, then I'll take a trade. But right now there's just too many levels, and if you can't identify a good level to buy, then it's going to be hard to trade. And if you don't know where to enter, where to exit precisely, then it's just best to stay out. So now this is what I mean. So now we can see, you know, the levels cleared up a little bit, right? Now we have a little more space between the levels. Before the levels were very close together. Now we have more space. So there's a new resistance here. So I'll drag this thing down into this point. I can leave this. We have a new support here. This one's still valid. This is still a stronger zone. So maybe we're even going to see like a wick down and then move back up. We'll see. And we're still, let's look at our trend. Let's look at the 4 hour. So we're pretty bearish at this point. We can see price went up. We have a higher low here, another higher, lower high here. So it looks like we're going to push down a little more and then have some more bears. So I probably want to wait for price to come back up into this resistance and then sell it back down into this support. Okay, so this is where I would take a short. You can see the wicked the entry, and then there's our TP. That was a quick trade. Okay, so now price broke on neutral level, right? So what we're looking for now is a buy. So I'm waiting for price to come back down, and then we're going to buy it to the top. You could take a sell now, but it's not a strong zone. So this zone might actually break and then go back up to this higher confluence level. So now it's a 75% zone, but like again, this is too close together to take a trade. There's not enough white space for me to make it worth the risk. There's the break. So we're looking for retest, and we could take it back up to this R here. Let me draw the zone. So let me set up a limit quickly. This would be our entry. Your stop loss would be below the support, and then the TP would be here. TP hits. So now if you guys want, we can set up another trade with the extensions here. Does this make sense, guys? Kind of how I'm explaining it and how I'm taking the trades. X mode is Dylan is asking if X mode is more accurate on the 1 daily time frame, like the strategy. X mode is accurate in all time frames. What the difference is, you need to sort out the bad and good trades yourself, right? On the strategy mode, the algorithm does that for you. If you're trading X mode on any time frame, you're gonna have to do the analysis yourself. You have to see, okay, is this a good trade to take, right? Because there's so many levels. You're gonna have to do that. You have to decide that for yourself. But the X mode is super accurate on all time frames. You can trade this on a 1 minute. You can trade this on a 5 minute. I don't recommend you use this on those low time frames because then you need to get in and out of positions a lot quicker. You need to process information a lot quicker. On the 4 hour or the 1 hour, you have way more time to look at the market, to look at how price is reacting at certain levels, and it's just a lot easier to trade than if you're trading on a 5 minute or 1 minute. The 50 minute is still okay, but I would always go with the trend. So let's take this short. Let's see if it plays out, and then we can move on to Euro NZD. So just because price already broke this resistance, I'm gonna take this trade. So I'm gonna from extension 1. So I'm put a limit here with my stop loss above extension 2, and then my TP here. And you'll see that the risk to reward is really bad, but just because it's a high probability trade, 73% chance of a reversal, it's sometimes it's okay to take this. I wouldn't take this over and over again, but there it is. So we have hit extension 1, and then we're back into our resistance. So now price will probably move back down and then continue back into support. I'm assuming. Yep, there you go. That's funny. Yeah, so let's move on to Euro NZD. I don't have it in my watch list, but I can add it quickly. Okay, Euro NZD. Okay, 4 hour X mode. Let's have a look. Okay, so I believe X mode is saying long. I mean, not the strategy is saying long, right? Yeah, so it already hit TP2. I mean, everybody should be out of this trade at this point. But let's have a look. Chris, what exactly do you want to know about this? A short, okay, a short from the 75 to another level. Okay, let's have a look. Yeah, so we can see a nice rejection here on the 4 hour on Euro NZD. So what I would do is, I guess price could move a little up again just because we have this doji here. It's like an indecision candle, so you might see another push up, but you could take a lower risk trade on this. You would put your entry here, and then your TP1 would be here, and then you can have your TP2 there if you want. Let's look at the 15 minutes quickly. Yeah, so you could probably have price move up a bit again to this, either to this zone or to this zone. When I want to enter a trade, I always think if I want to enter a sell, I ask myself how far up can price still go, and I want to sell from there because I want to get the highest price, because then I can have a tighter stop loss. So right now I would wait for price to either go back into this resistance or this neutral zone. Looks like it wants to form like a higher low here, so we can see prices moving up. So I would want to wait for price to move back into this area, and then from there I can look at shorts. Right now I missed the best opportunity to enter, which is this a limit order on this resistance. But yeah, if this would be a short opportunity, if you can get a good entry, and then you can have your stop loss above this resistance level, and then you can have your TP here, TP1, and then TP2 here. Any other questions for X mode? No, NNR does not Someone is asking if NNR means if it's a weak resistance. It doesn't mean it's a weak resistance. It simply means that, you know, on the high time frame, basically it's a neutral level. So let me try to see if I can explain this correctly. So here we have a neutral level. So I mean, right now it's a mix. So price could go up here, bounce off, hit this resistance, and then come back down and basically create this a resistance level again. So it's neutral. It can be used as support and resistance. The resistance levels, they're mostly just used for resistance. So even for this resistance on the 4 hour, where was this? I think no, it was on a 30-minute resistance. I guess I can use this like as an example. So if price moves up, it breaks this resistance, and it'll come back down. It'll now use it as support, but it's not going to be turned into immediate support. Like it'll probably still say resistance, just because when price is moving back down here, it's still resistance. It'll need multiple pieces of confluence to make it support. So if price moves up and it touches it, you know, a couple times and then moves up again, this R will turn into a S or an N. Does that make sense? So it doesn't change the letters when it breaks. It changes it when it has enough confluence to make it support or resistance. But I mean, that's really just a detail. I wouldn't worry about that too much. You know, the primary principle you need to understand is how price reacts at levels, and you know, if you should be buying or selling, right? So on this pair, for example, Euro NZD, we can see the macro is an uptrend, right? This the shorter trend is bearish, but I would still be looking for buys. So for, you know, you could take a short here and take it down to this neutral level, or you could just wait and take a buy from here, you know, or you could even, if price allows, it could even go back here again, and then you can take another buy. It all depends on your style, how you want to trade. But yeah, I'll be looking for buys here, either down here or a break on this resistance. So we'll wait for a break here, and then take it up here. Yeah, I'm always aware. Mel is asking, do you look at the overall trend? Do you look at the daily or any other time frame? I'm always aware of every trend. So I know, okay, the 4 hour, let's say, is bullish, right? So we can see a big bullish momentum. So I want to know, okay, at this point, are bulls or bears in power? Right now, I'm seeing some exhaustion at the resistance. So I'm thinking, okay, you know, price is struggling to move above. That means some sellers might be entering the market to push price a little back down, and then from here, because we had this big bull momentum from here, price might go back up from this level. So if I know there's going to be a short here, I'm going to go into my, let's say, 1 hour, and I'm going to wait for price to go back up so I can take a sell. Or if I can take a sell up here, I'm going to wait for price to basically move below this level, this support, and then enter with a sell limit on this support, so I can take it down to the neutral level. If you're closing and opening trades based on levels, you should be able to stay within the trend. Just be aware, like sometimes if you're going against the trend, like price can change so quick. So it can literally just wick down and then move up pretty quick. So if you're going with the trend, you know, the probability is in your favor. If you're going against it, then you're going against the house, basically. Because for example, on this leg here, on this big push down, the biggest resistance here is this level here. This would be your biggest resistance. And this is just basically resistance to create a higher low. So what I'm thinking is we're going to see the price moves up, moves back down, create a higher low, and then it breaks this and it moves to the next resistance. Or because market is creating lower highs, we can see lower highs here. So this could be the third lower high, and then we could see a new lower low, you know, down here. So we could see something like this. I mean, that's going to be a little more advanced, but as long as you stick with the levels, you don't have to know higher highs and higher lows. That's just added knowledge. The algo really does that for you. So as long as you know how to trade the levels, know where to enter, where to exit, then you can use the tool. I would say the 4 hour and the daily, those are your most important trends. So you can see here, market macro trend is bullish, and it's attempting to break out. So it's attempting to break up. But just keep in mind that this PAS, that's still in beta. So I wouldn't rely on it too much, but it is quite helpful sometimes. And one thing you guys can look at also is looking at how the daily candle closed. So if we get a really strong bullish close here on this candle, that means most likely the next day is also going to be bullish, right? If you look at the market, in most cases, the candles, if there's one bearish close, the next candle bearish close is also bearish. You know, there's some consolidation here, but we got a bullish close, next day is also bullish. But a bearish close, next day is also bearish. In most cases, it works like that. UNZD has been a little weird. I mean, most pairs have been a little weird since Corona. But you know, if you're looking to go long, looking at the daily candle is a kind of a good indicator. Just be aware that, let's say today the candle closes bullish, and then tomorrow you look in the charts, or let's say this afternoon when you're trading Asian session, you know this candle closed bullish, so that means you're only looking for buys. Don't just go into a buy, right? Because price needs to create that lower wick, right? So you can see every candle has an upper wick and a lower wick, right? So the daily candle still needs to go down, create that wick, retest that support, and then go back up. So this is where that higher low comes in, right? So let's say this pair closes bullish. On the next day, it'll have to go down, create the wick, and then move back up. Any other questions, guys? We have time for one or two more questions. Does macro trend take into consideration which time frame? I'm not sure what time frame exactly. I mean, it's just kind of looks at the structure of price. So, I mean, like I haven't looked at the code, so I can't tell you 100% what time frame looks at. I'm sure it looks at multiple time frames, because that's what I would do. So if you look at the 4 hour, like, it looks bearish, right? If you look at the daily, you can see some bulls here. If you look at the weekly, you can see even more bulls. So it's probably going to look at the daily and the weekly to come up with that. I don't think it's just one time frame. It's most likely multiple time frames. So just like when you're trading X mode or whatever your strategy is, you're not just looking at one time frame. You're always looking at the majority of the time frames. Because the problem is, if you're stuck in the 50-minute scalping and you forget to check how the 1 hour closed or the 4 hour closed, you're going to be wiped out pretty quick. Because these bigger candle closes, they tell you so much about price. And if you're stuck in the 15-minute or the 30-minute without checking the daily or the 4 hour, then it's going to be really hard to get those good trades. Do you prefer to let the pending orders to run if only 1 out of 3 splits got triggered and hit TP1, or would you delete the other 2 pending orders and put another pending so you can get all 3 positions again? I usually work with 2 positions, so they usually get all triggered. With 3 positions, and the reason why I'm using 2 is just because I'm trading a fund. So our risk protocol is to use 2 positions, not 3. But if it's my own account, then I would still use 3, but I haven't traded that in a long time. So to answer your question, sorry, just went on a tangent there. Me personally, if I make money on a trade, I'm just going to leave it. I'm going to look for a different opportunity. So I would delete my pending orders. If I see price coming back down and it looks like there's, let's say the trade only played out once, then I might take that second time again with all 3 positions, but lower risk. So if my first trade was 3.5% risk, I would lower my second trade with like 1.5 or 2%, just because then you're less likely to lose your profits, right? So what I do is I still split up my positions into 2 or 3. If I do 2, I usually go into the middle. The reason why I do 2 is just because then it's way easier to take profits, right? Because then you can take. Am I muted or not? Yeah, no, I'm not muted. Okay, good. So the reason why split positions are good, because then you can take partials on TP1 and then take your other position on TP2. Would you say your NZD is still valid on daily? Looks like it's respecting price structure point now. Yeah, I mean, it would say it's still valid. It's a pretty good support zone. And if this breaks, you're probably going to be able to take another trade like somewhere here or here maybe. We'll just wait what the algo says. So for taking profits, I would recommend doing the lower, so if this would be your TP1, I will put my price here. Because sometimes what happens is price will go up, it'll just shoot into TP with a wick, just hitting that little price point and then straight down. Because again, these are levels where, buyers and sellers move in and out. So you'll have a big rejection a lot of times on these TP levels. Same thing for breaks, and it goes back down. You can have a big push up because it broke a major level, like 100% alignment level, and then if it breaks, it comes back down, there's still order sitting there for buy, and then it'll just shoot back up. Oh, sorry. I think I read your question wrong. You mean for which position should go on TP1, which position should go on TP2? Okay, gotcha. It doesn't really matter. What I like to do is I like to do TP1, oh sorry, the first position, the first two positions on TP1, and then the third on TP2. Sorry, no, the third position on TP1, if it's open, right? If it didn't trigger, right, then you just take both on TP1. But if all three positions are open, TP3, I keep saying it wrong. Position 3, I take profit on TP1 because you have more pips. So it means that the profit is going to be higher. If you take profit on TP1 using your first position, the profit is going to be lower, right? So if I have all three positions, or if you have all three positions, then you can take the third position on TP1. I mean, it's not going to make a big difference. Like, it's not going to make a huge difference in your portfolio, but it's just a small tweak you can do. Okay, guys, hope you learned something. If you have any other questions, you can pop them into the community chat. Let me know in the chat room, in the global chat, how you liked the webinar. If you have any feedback, let me know. And yeah, I'll see you guys next week, Monday.